How's it going, everyone? It's Sam. Today I want to talk about the one stock that I bought this week, which is not NAT, but it is an oil tanker stock. And I'm going to go through, talk about why I bought the stock and just the stock in general. Now, I will say this is still just a small position for my total portfolio, so I'm not putting my life savings in this stock, and everything is relative, so I put a relatively small amount for me. That might be a lot for you, that might be nothing for you, but we're going to go through what I was thinking when I did it. And if you guys don't mind hitting the like button, it really helps out the channel. And if you guys want, there are links to WeBull and Robinhood below. But I'm going to talk about this stock that I bought today. And I'm going to put links throughout the video because there's going to be one right here that shows the stock a little bit more in depth. And then I'm also going to talk about NAT. But I do want to say I am still bullish on NAT, even though I haven't talked about it today and I'm not buying it. But I'll put a link here and at the end of the video. Both of those links will show right at the end screen. But then at the end you can click on those videos if you don't want to click them now. That way you can watch through to the end of this video and it's a little bit easier for you. And if we look here in my portfolio, this holds most of the stocks just in Seeking Alpha that I own. And it was a great day in the market. There were just a few companies that were down. I think I had 5 companies total that were down, and 3 of them are oil tanker stocks. So DHT, NAT, and STNG, while almost everything else was green. I want to talk about that, why I bought the stock that I bought. Right away, we're going to look at what I actually bought, and I bought STNG. So I did just buy a small amount. So in this portfolio, I have about $3,300. And I want to show you, I didn't buy a ton just because I am saving up to buy a house, honestly. So I can't be spending $300 or $400 each week in stock. So I put in $50 and I already have a position in Scorpio tankers. So we'll pull that up here. But I do have positions in a couple different of these oil tanker stocks. And I have NAT, DHT, and STNG. All of them were down today, but I have about 8 shares of STNG overall. But we're going to take a look at it. And I realize that this might not be a significant amount of money for someone else that is watching this. Maybe you make $100 an hour or $200 an hour. I'm not quite there yet. So $50 isn't a huge amount of money for me, but it is several hours of my time at work. So keep that into consideration. And as we look at this too, NAT, DHT, STNG are all down on the day, but I've been using them, and I've talked about this in past videos, I've been using them as a hedge against the market downturn, right? So the market goes down, we have to kind of stay back in our houses again, or they have another shutdown, which I don't think is likely, but I think that if that happens, it will cause a lot of my other stocks to go down, and these oil tanker stocks will most likely jump through the roof. And that being said too, if there is more oil production or more oil demand too, these stocks should go up in value. But there are a lot of moving pieces with these stocks, especially because you're looking at oil, you're looking at economies, you're looking at the companies themselves, you're looking at their balance sheets, you're looking at their income statements, and you're looking at all this changing over time. So there's a lot of moving parts. It's hard to nail down exactly why these are going down or up at any one moment, but we're going to take a look into it today. And I do feel really good about STNG as a long-term play. This isn't like how a lot of people think of NAT, where they're going to try to get out in a few weeks or maybe at earnings. I think STNG is going to go back up and possibly double soon. So if we look here, end of the year, they were up around $40. They are down about 60% on the year. And if we go back even further, they were up more. Now they have diluted the shares since they were $40 a share, but I still think that they're going to do quite well in the future. So if we look at the oil tanker market index, which is something that is put on NAT's website weekly, it's something that I've talked about a lot here. You can see that the oil tanker rates are going down. So last week compared to this week, and it has ticked down just over the last week. It went from about $30,000 a day to about $29,000, and this is significantly down from what it was this whole rest of the year. So it has been up on a tear recently throughout the beginning half of the year, and you can see it's coming back down to normal levels. But I will state that just because we're getting back down to the levels that we were last year doesn't mean that we're back to normal, because they've had so much free cash flow and so much money that they've been able to collect that it's going to make a difference going into the future. So we're going to look at their balance sheet and kind of look at why this is so important for STNG especially, and what they're going to do with this free cash flow. So as you can see here from Scorpio's website, they have a lot of tankers. So we'll start up here at the top. So they have a bunch of different stats on each of these different tankers. They have them numbered and named and the year built and all kinds of stuff. So as you can see here, a lot of their tankers are newer: 2012, 2014, 2015, 2017, 2019, 2020. And as you can see here, they have a massive, massive fleet of tankers. So 137 tankers, and they are clean tankers. So they aren't crude tankers or crude carriers like NAT and like DHT. So they don't carry crude, which is pretty much what you get out of the ground, and I'm not a scientist, so don't quote me on that, but they carry oil that's already been refined a little bit and been cleaned up, and they hold on to it. So that is what they do. So as you can see here, they're much bigger, and the fact that they're clean carriers takes a little bit more effort. They have to invest in scrubbers. It's a more debt-intensive process, but this is something that they wanted to do, and they wanted to set themselves apart. So as you can see here, they should be much more leveraged than a typical company, and they are. So they're a lot more leveraged than something like NAT, and you can see that here in a moment. But before we get to that, you can see here that rates are dropping now, like I just showed, but that's kind of normal for this time of the year. So we were very high in April, actually. So this is the average monthly VLCC rate, which is actually a different kind of tanker. But if you look here, it's very similar to this pattern. So I just wanted to show it because it's from 1990 on. And as you can see here by the red and the blue, that's what I'm kind of comparing it to over here. So as you can see here, it decreases during the spring, bumps up a little bit during the summer, then decreases again significantly right before we head into winter again. So one of the tougher times of the year right here, we've had a really good season. So April was probably one of their best months in years, and we were able to make so much money there. This is going to be propped up, and then hopefully for the rest of the year, even if it stays down here, it's going to go back up towards the end of the year, so they're going to make a lot of money then. Now, when we look at STNG as a company, they don't pay out their shareholders like other oil tanker companies, and we're going to look at why here. But as you can see here, it's a very seasonal company, so 500 million back in 2015, and then 2 years later, 200 million in revenue. So it can go up and down a lot. If you look at their net income, they've been negative for a while. They're about to turn positive for this year, and they're going to have a big quarter. So when we look at their balance sheet, you can see they have about 120 million in cash and short-term investments. They have about 150 million in total receivables. So that is a pretty good amount compared to something like NAT, but they are a lot more leveraged. So when we look at their current liabilities, they have about 523 million total current liabilities, and they only have about half of that to cover. So total cash and short-term investments, total receivables, it's about half that. So that is the reason that I think a lot of people are getting worried about this stock, because it is decreasing their tanker rates, their spot tanker rates. And this is at a time where they really need cash because they do have a lot of liabilities. They're really strapped for cash. However, they have a very good book value. So even taking that into account, their book value per share is about $37 as of last quarter. So that's a massive amount compared to their $16 stock price. So I really think that as long as they get out of debt and are able to get out of debt, they're going to do quite well. And with that said, they are in a very good position to be able to pay off some of that debt. So they have been able to make so much money recently throughout the last couple months, and they're going to make more money this coming winter. So if they can push off some of that debt or just pay it down, I think that they're going to do quite well. And you can see that's kind of what they want to do, because they don't pay a large amount in dividends. As you can see here, they pay about 40 cents, which is not like the other tankers. They've kept it consistent at that amount. And the other tankers just pretty much pay you whatever they can, whenever they can. But I think they're really going to focus on their ability to pay down their debt. And that is something that they're really going to keep in mind because they have such a strong earnings right now and they have such a strong book value. They just need to be a little bit less leveraged. And as you can see here too, just last year they had about $4 worth of free cash flow per share. So they are bringing in some money. This year, the trailing 12 months is about $3.50. I think this is going to go up significantly once we are hitting our Q2 results or our Q2 earnings. And I think they're going to surprise a lot of people because when everyone else is reporting terrible numbers, and I've talked about this before, they are going to report some of the best numbers that we've seen in years. They're going to be paying down debt. They're going to be earning a lot of money. They're going to be seasonal again. So when we hit winter this coming year, they're going to start increasing their earnings again, most likely by what we've seen here in the charts. So that's going to be really interesting to see. Some people probably will want to jump in when it's down a little bit before it comes back up and before they start earning more money. So I think this is something where as soon as they start paying off some of this long-term debt and they don't have it dragging them down, they're going to do quite well. And if you just use it as a little play like I'm using against the budding economy, so if you use them as a hedge, I think you're going to do quite well. If you guys like this kind of stuff, please again leave a like button. It really helps out the channel. If you guys want, there are links down to WeBull and Robinhood. Just know, for this video, I'm not a financial advisor. I'm not a professional stock picker, so do your own research, but I appreciate you guys watching. Again, I'm going to show those thumbnails for the other videos right here in a couple seconds, and you can click those if you want to look at STNG a little bit more in depth in a different video, or if you want to look at why I'm still bullish on NAT and kind of my update on whether I'm going to buy, hold, or sell them. So I appreciate it, guys. I will see you in the next video.